The Euroviral contagion is on. In fact, it never left. We are tiptoeing around the massive debt load that Italy has, trying not to wake the beast as it rumbles through the EU and by extension, the rest of the world. Italy is a huge economy for the EU, but its weakness, its slowdown, has been overwhelming since around 2011-2012. How will this end? Well, you came here for the truth, so let me unveil that for you. Today we're going to look at the situation in Italy that's going to bring up the issue of debt and deficits and what people are doing about it. I want to get into so many other issues. Let's begin. Why mini bots loom big for investors in Italy assets. This article is out of Bloomberg, and they brought up a couple important points, and I wanted to touch on them today. Italy's newly ascendant populist party sent jitters across Europe's debt markets by proposing a new class of short-dated government notes that would be created specifically to pay state arrears. The idea spooked investors who see it akin to issuing a parallel currency that would further dent the country's fiscal sustainability. Bond yields have climbed to the highest levels in almost 3 years, while the premium to cover a default in the nation's debt is the stiffest since October. They're talking about the credit default swaps. That is, in fact, what the Pope had said was very bad news. Now, what we're looking at here in Italy is a situation that has been going on for years, but it has really escalated ever since that range of 2011-2012. Things started heating up in Europe with Greece. Then there was Spain and Italy started to look very weak, but they came out there with the ECB and they said, don't worry, we will stop at nothing to make sure that these countries do not need a bailout, do not have any sort of Greece-like scenario happen to them. Now, we have not seen to the levels of Greece yet. However, these countries have been receiving bailouts for years. It's been going on. The newest one is called the CSPP. And the CSPP, for those who don't know, I'm sure if you're regular on this channel, you do know, CSPP is basically the program that they have from the ECB that buys debt of companies. Which companies? Basically all of them. So it's a bailout of corporations all across the EU. This is very important when you look at what's happening here because you're undermining the system. If you can issue what is essentially a parallel currency, you're going to undermine the current system that is in place. I think that is truly worrisome for those in control. I don't think they'll ever go in this route. But look at with all the turmoil you are seeing today in the markets right now as of Monday's trading session. The market should be scared. The market should be fearful. Volatility should be spiking. But what? It is surging. You're seeing the stock market surging instead. I mean, it's ridiculous. Nothing makes sense. In Europe, at least it makes a little bit more sense. Like when you have this CDS is going up, at least one thing makes a little bit of sense. Now you have the Italian banks that are just taking a nosedive right here. And this is an ongoing issue in Italy with their financial sector. If you want to short something, I'm not telling you to do this. I'm not giving you advice. If you want to short something, it looks like Italy's banks are still a good buy because this seems to me like it can only go downhill from here. Same issue in Spain, Greece. The whole thing is a short as far as I'm concerned. I don't care if the ECB is going to come in and print it up and buy up the debt of these corporations or directly go in and intervene in the markets, which they say they can't do, but of course they do. This here, we look at it, as far as I'm concerned, there's nothing good going to happen in the near future unless they get a new government, unless that government comes in, cleans up the entire system within a few years and restores the economy. It's not likely. It's not likely because you could see the other areas in Europe. You can see what's happening right now with the burdened taxpayer, with the the economy is just struggling because of everything that's been happening with, let's just say things coming in from overseas, and that's causing a big problem. There's too much strain on the average individual. The government simply can't keep up. There's no way. And as a result, we have these fiscal difficulties. Now, this bothered me on many levels. It doesn't seem to bother many people here in Canada, but I'll tell you right now, it is, for me, truly bothersome. British taxpayers footing half of the bill for the $83 million royal wedding. I don't know where this estimate of $83 million came from. I had heard different numbers. But if you are a British taxpayer, you had to pay some of this bill. But why? We have so many problems today, and yet we gotta pay up for somebody else to get married. Would you pay for some random guy down the street's wedding? Of course not. But you are paying for these individuals. Now, I know a lot of people have such, they love this whole monarchy business. And I think that it is a joke. It's truly a joke. It is obsolete. And it should be repealed. Anyway, it cost Canada $43 million to support the royal family in 2015. So if you're Canadian, you don't realize half the time that you're paying a lot of money every single year to support the royal family, so-called royal family. And now a lot of the information is starting to come up, and I'm really happy about that, who these people really are, going back many, many years. But anyway, the point I'm trying to make here is that we have so many things going on in our countries, but we have to pay millions of dollars for silly things like this. All right. Food poverty. 5 million Brits go without eating for a day because they can't afford food. Research reveals the lowest income households in the country have an average of just £3 per day to spend on food for the family. How in the world are the average people going to make ends meet? I mean, that's truly troublesome, but don't worry about it because you just paid tens of millions of dollars to a family so that they can get married. Something doesn't seem right here, and this is what I'm trying to get at. The money that we are forking out for our taxes is squandered. This is just one recent example, so I wanted to show it to you. But we pay so much in taxes. Where does it go? Why isn't it being spent appropriately? Of course, it never will. That brings me to my next point. Ownership society percentage of total assets and liabilities held by the wealthiest 1%, the next 9% and the bottom 90%. You could see here, I love to cover this as regularly as I possibly can. All right. Now, the bottom 90%, basically everything that they've got is in their principal residence. Everything. And their debt is held right here. You can see 74% of the bottom 90%. It's all debt. But if you are in that top 1%, you're doing good. The next 9%, still doing good. It's just that bottom 90%. So basically everybody. Everybody. You'll look here, in this case, business equity is something I wanted to mention right now very quickly, and this is going to relate to the issue I talked about yesterday. Okay. Business equity. People with wealth, particularly in the top 1% of people, but even in the next 9, it depends on their profession. They own businesses and they use their businesses in order to have the minimal amount of taxation and to be able to take advantage of the way business works. Now, if you're in Canada, for example, you pay a 15% corporate tax rate, and there are actually ways to get it lower. Totally legitimate. 15%, perhaps a little less. The average person, you're making good money, so-called good money, let's say $60,000 to $80,000, somewhere in that range there, okay? Good salary. That right there, you'd be taxed at a very high rate. Maybe it's 30%, 40%, wherever you're living, right? They immediately have that advantage, and they use business to do that. You don't want to have a salary, you want to have a business. A lot of people don't know about this. I'm going to talk all about it on my new channel. A lot of people don't want to see it on this channel, but you know what? I got to talk about it. I have to get it off my chest because a lot of people don't realize it, how they can save money, how they can make money, and that's it. I'm doing the other channel. I just decided that right now live here. Okay, debt to GDP and the total debt outstanding. We are looking right here at a few charts from Real Investment Advice. I think it's a great website, but things that I cover regularly, but we're looking at information that is just so important for people to understand. The line at the bottom here, the federal debt, total public debt, you can see where it has gone in years. Over the years, total public debt as a percent of the GDP is the blue line, how it has really, really spiked up high since the financial crisis. Both of these, in fact. There's no way to ever, ever, ever reduce these, either one of these, unless we have some sort of complete collapse of the system. And that would be great in the fact that we'd be able to sort of get some sense of reality back. Okay, the runaway debt train, the reddish line here, federal debt, total public debt, and the blue line, GDP. Now you can see that it has been declining over the years. There's less and less of real GDP increases that have been happening. I mean, after this financial crisis, yes, it came back upwards fictionally, and you will see that over the years we get less growth, more money is being printed, more manipulation, more intervening in the markets. We can see that they're throwing everything at it, yet less growth. So it is true that the more dollars they print into the system, the more they then have to put into the system to get the same effect. I hope you understand what I'm saying there. Okay, then we have this. This brings me back to my point. Most of the budget goes towards the defense, social security, and major health programs. Can you believe that? I mean, where is all this money really going? Because we complain about all of these things. We really do. Take a look at the pie chart here. I mean, 6% is going just to the interest on the debt. Who are we paying this interest to? Who do we pay that interest to? Think about that for a second. Oh, we owe it to ourselves. We owe it to ourselves. That right there, when I hear that, I know that person hasn't looked into how money is created. I know that. All right, let me move on here. It's an interesting chart. You can pause the video and look at it for yourself. Old versus young population demographics are a huge problem right here because you can see that there is an increasing number of elderly and there's a decreasing number of young population. That's not good. That is not good. The situation that we are presented with here is, let me just get this out here, and you could see that if I exaggerate this, over time, we have a very, very big problem. This is not good. And this is not the only country. It's not the US only. You're seeing that even more so in Europe. You're seeing it more so in Japan. And guess what? All those taxes, all that money that you need to flow into your system so that it could be squandered isn't going to be able to come in anymore. And there's going to be a heavier burden upon the people in the workforce today. That means what? Cutbacks. Get ready for the austerity. If you found this video informative, please give me a thumbs up. Last but not least, if you found the video informative, I know you will find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can actually flip through these books. All you have to do is go over to Amazon. There's a look inside feature. It's going to allow you to flip through the pages of these books to see if you like them. Take care.